Okay, fam, welcome back. So today we're going to be going over our monthly dividend and options premium income for the month of October. So with that being said, let's get it. All right, so this is basically for those of you out there that are passive income investors, maybe not necessarily for crypto, although there may be some hybrids out there like us. Just remains to be seen. So yeah, anyways, let's get into the content and go over the portfolio, and then we'll kind of go over the plans going forward afterwards. Okay, so I'm gonna start out here on M1 Finance. Just so you guys know, the crypto portfolio on the grayscale side is still the same. So now we're going to go over the actual content for the month of October here. So we got 31 cents from CRF, again, 4 cents from CRF, 5 cents from CRF, $7.64 from ORC. 300, it looks like $300.82 from TSLY. $1.71 from TLTW, 14 cents from Beto, $2. Well, I take that back. $2.16 plus 96 cents from MPW, 1 cent from Philip Morris. NVDY, $39.23. Leggett & Platt, 63 cents. Horizon, looks like maybe a combined total there of 45 cents. PSEC, basically 1 cent. EFC, 13 cents. RA, $7.62. APLY, 73 cents. USOI, $4.09. Let's see here. So GSBD, which is a quarterly one. This is a Goldman Sachs BDC, $20.45. QYLD, $6.24. You guys can just ignore these here because I think that was actually basically a double deposit. So it looks like they had to cancel it. So RYLD, $8.81. TWO, $16.10. Again, this is a quarterly based dividend ETF. Or REIT, I guess in this case. So CLM 31 cents, 49 cents, or sorry, CRF 49 cents from CLM, 9 cents from CRF, 60 cents from CLM. Man, these, I don't know what's going on with M1 here. They got me all confused and stuff. They got these different, like, everything's all mixed up and jumbled and multiple payments and whatnot. Okay, 44 cents from SFAL, 14 cents from OPP. Again, we did kind of ramp up ACP and PDI, so you guys can see them up here. $30.81 from ACP, 4 cents from BSTZ. And in terms of the total dividend income for this one, that would be $472.37. So before I go any further with this, I'm actually going to go over to the portfolio itself because I want to show you guys this. And again, I wasn't going to talk about this until the end, but I do want to talk about it now. Dividend growth stocks are gonna be on the back end of this. We're not going to focus so much on that from the initial onset as we are monthly paying dividend stocks and ETFs. So in terms of the positions that we want to, and again, we've said this before, we want to get each one of these monthly paying, lower yielding, somewhat lower yielding, or modest, medium yielding dividend ETFs somewhere between $30 to $50 a month of income. Okay. So among the list of those, and again, this is outside of the Yield Max ETFs and Roundhill and all that stuff. So it'd be PDI, ACP, RA is another one. If I keep going down the list here, RYLD. In terms of the quarterly dividend paying ones, we do actually want TWO and GSBD to be roughly about $30 to $50 a month, but those will come later. USOI, we're probably going to get rid of that one at some point. TLTW, we definitely want that one as kind of a core staple. CLM or CRF, either one would be fine. HRZN, we want to have that one as well. Definitely SFAL for sure. Continuing to go down the list here, OPP, EFC, BSTZ, those are all keepers for us at some point. Of course, SCHD, but again, the quarterly ones will come a little bit later. NUSI, this is also another one we want to get back into. We used to have this one. QYLD is also another one. And just continuing to go down the list here. Let's see what else I can find. JEPI, that's definitely one we also want to have. Either that or JEPQ. We don't need both. Just one or the other will do. Let's see, continuing to go down here. And believe it or not, we did actually used to own almost all of these. So let's see what else we got here. Main Street, that's definitely one we also want to have for sure. $30 to $50 a month of passive income from that. PFLT. And WHF, that would be another quarterly paying one that we would want to have $30 to $50 a month. So that's kind of the rundown on what we're looking going forward in time for these in this portfolio. Okay, so now going to Robinhood. I'm not going to go through every single one of these because it would take forever. You guys have, if you have not seen them, the separate transactions, dividend payments, all that stuff, buy, sells, profits, losses. You can go back to the buy, sells, and dividends on a weekly basis videos. You'll be able to see that. So I'm just going to list them off here. So for dividends from Robinhood, we got $46.09 from SPYT, $25.58 from GUI, $31.83 from Tesla, $86.78 from Ybit, $34.13 from OARC, 35 cents and 42 cents from GPIX and GPIC, $281.23 from NVDY, $37.62 from MRNY, Coney $256.52, TSLP $34.48, AIPI 147.73, FEPI 107.86, YMAX 221.63, YMEG 175.84, QDTE 113.91, XDTE $70.73. So the total for that comes out to $1,672.70, like you can see here. Okay, so going next on the list in terms of the profits we made, $14.71 from QYLD, TSLP 57.82, Soundhound 210.39, Serve $159.27. And then of course we got a couple losses here. So MSTY, we could have avoided the loss on MSTY and JTAI if we had waited just a few hours to a day longer. Sounds kind of bad when I put it like that, but yeah, we actually would have been in profit on both of those if we had been just a little bit more patient, but is what it is. So bottom line, we're, in terms of total net profit and loss for the profits and the losses on the month, we're actually still positive. Again, I've told you guys this countless times. You know, if we have to take one step back to take two steps forward, that's fine. What matters at the end of the day, it doesn't matter if we take losses, so long as the gains are greater than the losses and we're making forward momentum. Ultimately, that's what matters here, okay? So MSTY minus 1404 and JTAI, which is a AI penny stock, $52 minus $52.59 on that one. So the total numbers for that, $375.56. And then of course we have the Webull account. So we got the OARC position here that's still there. And the dividends, the ones for November haven't come out yet because again, they take a few days for some reason, but you can see here the October one, $34.30 on this one. So there it is, $34.30. And in terms of the options premiums and also the call debit spreads, these are all mixed together for a total number, just to make it more simple, because again, you know, it is technically all options and we kind of want to keep all that stuff together. So the total positive return here, total return positive, is plus $1,036 for the month. Now, in terms of the call debit spreads themselves, so we had plus $320 on American Airlines, plus $12 on CLSK. That was kind of a test run. Moderna minus 120 and Snap minus 255. But then again, on another Snap position, we took profit on the first for actually more than we lost on that Snap position. So we'll go over that next month. So the total numbers for this month is $3,590.93. Keep in mind that's pre-tax, that's not post-tax, okay? All right, so now I've gone over the M1 finance portfolio, so now I want to touch a little bit on crypto and dividend paying stocks and ETF going forward, okay? So once OARC is in profit on Webull, we're probably going to get out of that and just close down our Webull account. Again, because you have technical analysis trading coming to Robinhood. I don't know if you guys know that, but they are apparently going to give you guys charting and stuff like that on Robinhood. So that's pretty cool. You can literally see it every time you log into the platform. So we'll probably do that with Webull, and then already give you guys the rundown on M1. In terms of the Grayscale trusts, if we have time to before the end of the bull run for crypto, we may add more to this. It kind of depends on how much capital we make. And if it seems like a wise decision at the time to actually get back into these if they have not already run yet. What do I mean by this? Well, it's quite simple. So you guys can see all the different call debit spreads we have here on the miners. If I'm remembering correctly, I believe the miners, assuming they all go into profit, all of these call debit spreads combined will produce about, I think it's in max profit. In terms of max profit, if they all go above the top strike price, will be about $100,000 total. And as you guys know, Bitcoin always runs before Ethereum and altcoins. So again, my theory could be off here, but basically BCHG and LTCN should run first, and then we see ETCG, ETH run next, and then the rest of the Grayscale Trust after that run afterwards. So if we have time, if the timing of it plays out right and we're able to cash out these call debit spreads ahead of the alt season, we may position back into Grayscale after that. Okay. So that's the Grayscale. In terms of the, well, actually, I'll get into the Robinhood stuff in a minute. So for the native crypto portfolio, kind of the goal here is basically from now until probably the end of the year, we're going to accumulate literally as much as humanly possible, as much native crypto as humanly possible. Okay. Again, I shouldn't say we don't have enough money to go around for both the Grayscale Trust and also the native crypto space, but between the call debit spreads, the miners, the dividend paying ETFs, the native crypto, and the Grayscale Trust, it's kind of really a lot to get into all those positions and manage those. So we don't want to be overexposed and over diversified here. We want to keep it kind of somewhat concentrated. So we're going to pile on as much money as we can between now and at least the end of the year. Okay. It kind of depends on when the Bitcoin dominance falls off a cliff, gives us the alt season. If the alt season hasn't started by December 31st, maybe we extend that out a little bit longer, maybe another month or two. We'll have to wait and see. But we intend to pile in heavy into pretty much all the positions we already have. We may add some new ones. We'll have to wait and see on that. The call debit spreads for the miners, if those are in profit before these run, we also may take a piece of that and add it to this native crypto portfolio. So that covers that. So in terms of adding more money to both the options for covered calls and cash secured puts, and also the dividend paying ETFs on this portfolio. So we're probably going to take a vast majority of these call debit spreads post-tax and basically just keep it in the portfolio. Because again, you got to remember, when you deposit money into Robinhood, if you have margin enabled, they'll give you 2x leverage. Okay. So if we make 100,000 and we, let's say, manage to keep 70,000 in here post-tax, that automatically becomes 140,000. You could basically just put that into stable, total return positive dividend paying ETFs. And then we don't really need to worry about the margins so much, because by the time we even get around to this, the Fed funds rate, I should say by the time we cash out completely out of crypto by the end of the bull run, by the end of next year, the Fed funds rate should be much, much lower than it is right now, which means the borrowing costs for having exposure to margin or credit or any of that stuff should be pretty much at the floor, I would think. If again, this is all basically speculation, but I'm pretty sure this is not going to be far off. So we'll take the vast majority of the money out of the cryptocurrencies, out of the crypto space, because likely we're still going to get that crypto bear market in 2026. We don't want to be in when the market dumps. We want to be out, completely out, 100%, and then wait for the bottom to come in. You guys already know this. So pretty much we're just going to take, I would say, probably before the bull run's over, we'll probably take like 70 to about 80% of that and drop it immediately into from the call debit spreads and the things that run first, I should say, immediately into the kind of stable dividend paying ETFs. And then the other 20 to 30% post tax, we may put that into some other cryptocurrencies if they haven't run yet. By the end of the crypto bull run, we want to be completely out, 100% gone out of crypto, put money aside for taxes, all that jazz, put the rest of it into passive income. Wait for the bottom of the bull run, or the bottom of the bear market, I should say. I don't know why I said bottom of the bull run. So anyways, in terms of the positions that we want to have here long term, so TSLP, we would like to eventually get this one up to at least $50 a month. We're pretty close on that. FEPI, we've already hit our goals on FEPI and AIPI. That's at least $100 a month. YMAX, YMAG, at least $100 a month. We're already there. NVIDIA, we may continue to hold this fund, but if the Roundhill NVIDIA ETF comes out, we may consider swapping it for that. Can't say for sure at this point. Mara and CLSK, those miners are going to go back once they get back in profit. We'll be cashing out of that. QDTE, XDTE, we want at least $100 a month out of that. QDTE, we already have that. AMC, you guys already know for that one, we're basically looking for AMC to go to at least $40 to fill that gap before cashing out. It could go much higher, could go way higher. Again, I'm gonna say what I said before, that I know Carvana is at $250 a share, but if Carvana, which pretty much I'm not gonna say is a meme stock, but it kind of is, went from $4 to $250, I mean the sky's the limit for AMC, especially if the fundamentals become really good and Wall Street looks at it and says, AMC is actually a good company. Maybe we should go ahead and buy it. And then all your hedge funds and short sellers and all that are trying to tank the stock down to zero are going to go bankrupt. All right, so SPYT, we want to get that to 100. That's $100 a month. We're basically halfway there. So GPIX, this is another one. We eventually want to get these each to $500 a month. Now, so in terms of the core positions, and these are all core positions we're talking about, by the way. And so in terms of the core positions for the options, we're going to start with Soxel and TSLL. And again, part of the reason for TSLL and not actually Tesla is because Tesla itself is hideously expensive. You need like 25 or 30,000 to write cash secured puts and cover calls on, because again, you have to have 100 shares. It's very expensive to own Tesla or any of the Mag 7. So we're going to start out with something a little bit smaller. So once again, I want to show you guys this. So the goal here is at least 5 contracts of Soxel and 5 contracts of TSLL to start. Okay. When the crypto bear market hits the bottom of the bear market, we want to eventually pick up MSTU and CONL, at least 500 shares of each of those, as close to the bear market lows as possible. Again, because not just the gains, but also the premiums over time. Okay, so if I go down here to kind of the strike prices, again, you guys already know we do roughly about a 30 delta when selling calls and puts. Just to show you guys what 5 per week would look like. Again, this is weekly options. This would be 500 shares, so 375 a week as kind of a staple. And again, of course, if Soxel ever went to like $5 to $10 a share, we're obviously going to buy basically a crap ton of it, right? Because it's super cheap. Why wouldn't we? I highly doubt that's going to happen though. So this would come out to $1,500 a month on the call side. And again, if I flip it around to the put side, we have 2 options here. So we got 111 for 1 week, but again, this thing is still pretty volatile. It's, the reason why the premiums are so good on this is because it is 3x leverage. That's why. So in case you guys are wondering, if it wasn't for that, it probably wouldn't get as many premiums here. So on the put side, a little bit less than 30, that's fine, whatever. As long as it's 30 or under, that's what matters. So 5 contracts here, 430 a week. And then on the flip side, we basically looking at roughly about 1,700 per month. Okay, so TSLL, I'm going to show you guys that as well. And in terms of Tesla, we do expect Tesla to go up massively over time. I mean, again, you got things like robotaxis, robots, automated driving. They even have like a software or some kind of supercomputer AI or something like that. So that's all obviously all very future tech. There could potentially be a lot of money in that. So we want to have some exposure. Okay, so selling the calls, you guys can see here. And again, I believe TSLL is 2x bull ETFs. So 155 a week on the call side for 500 shares, or about 600 a month. And let's see if I can find it on the put side here. Okay, so that's at 21. We'll go to this one. Okay, so you got almost 30 exactly on this one. So this one would be, it comes out to roughly about $200 a week, or about $800 a month. And again, the premiums on these are going to fluctuate based on the price of the underlying ETF. Just understand that does fluctuate with time. So some honorable mentions that we'll take a look at in the future. I can't give you guys any dividend ETFs as of right now, but in terms of options, ones that we're looking at here, obviously CONL and MSTU at the bottom of the crypto bear market. For the next bear market, NVDL will probably get back into this one eventually. SLV, which I believe is the BlackRock iShares Silver ETF. We do also want to own 500 shares of that eventually. Again, you guys got to understand with the metals, they're fear trades. So when there's economic uncertainty, risk of a recession, all that kind of stuff, these will go up immensely in value. And when that uncertainty leaves the market, theoretically, they should go down in value. So at some point, if the metals go down, we may take a look at picking up some shares of these, as long as the premiums are still good. And then going down the list further here. Okay, going down the list a little bit further here. So some other ones we're looking at as well would be things like maybe SoFi, SoundHound. These will fluctuate, though, of course. Palantir, USB, things like maybe HPQ, Bank of America, Fifth Third Bank, XLF, which I believe is the financial sector, GDX, which is gold. We may take a look at some of these as well going into the future. But with the core position for options, we don't want to have too many. Maybe just like 2 or 3 as core positions, and then just kind of have some that we trade in and out of going forward in time. And again, the ultimate goal in terms of passive income is roughly about $10,000 to $20,000 a month. That's kind of the starting point. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.